Alright everybody, so let's quickly go over natgas. There was a turn today that was interesting. So first we see the market goes up, 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 and then right here it's the biggest down volume in 9 waves, 2.2 times average down volume. So heavy selling from the top here. Now, once we have volume off the top, or selling off the top, or a sign of weakness, or change of behavior, whatever you want to call it, it's just selling, all right? And the response is weak because it's what? It's only 70% of the average. So you have selling on 2.2 times average down volume, biggest in 9 waves, and pullbacks on only 0.7 and 0.7. These two pullbacks. So that means that 30% less than average volume, which means that there's an issue. Why? Because when it went down to a support level, price couldn't rally away with any strength, and then finally had one move that went to test and started moving sideways. Why? Because sellers are absorbing demand and redistributing something here in order to break it. All right. So this is very important in that you have selling, 2.2 times average down volume, the biggest in 9 down waves, followed by weakness, full test. That puts it in an up thrust position. Selling there when you have 5 consecutive bars sideways like that. It's either redistribution or whatever you want to call it. Like you could also say it's absorbing the demand. Supply is absorbing the demand. Why? Because demand tries once, can't make any further progress, stays back down. Again, stays back down. Again, back down. Again, back down. Again, back down. Forming sideways range because it keeps on getting sold into and then finally breaking. So generally, I don't want to, sell markets with a lot of relative strength. But on a higher time frame, this is having a pullback. And now the second part of the story, which is one of the key indications of distribution, which is price goes up, they take some profits, price goes back up, heavy volumes, and a break. So when you have heavy volume like this and it can't hold, there's a problem. Because it means that this is an indication of distribution. So let's see, I wanted to show you guys something the White Club said about it. So this is a line that's very, very important. It says, we now become very suspicious of this advance on high volume or large volume, and particularly the failure to hold. All right? So an advance on high volume and a failure to hold, which is a characteristic of distribution. All right? So again, this is a little snippet. What is the characteristic of distribution? When you have an advance on high volume and that high volume can't hold, what does that mean? It means there's a breakdown after the high volume. That's what I see when I see this. I see markets going up, 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 high volume, and a break. So this is distribution. Why? Because you had an advance on high volume, could not hold, and instead you had a breakdown. So there's distribution here. And so I like to see distribution, particularly prior to the sign of strength or sign of weakness. This is it, that change of behavior. And pull back 1 week, pull back 2 week, and then finally over here, there's some more distribution as evidence right here. Okay. You see, as it goes up, it can't hold and instead breaks down. Right? High volume, can it hold? Can't hold. What happens? breakdown. What is that a characteristic of? Distribution. And that's it. So this is evidence of distribution because you have high volume, breakdown. High volume, breakdown. This is accumulation. Why? High volume, breakout. High volume, breakout. So I'm showing this in a very simple way anybody can understand it. High volume, go down, distribution. High volume, go up, accumulation. Done. High volume, go down, distribution. High volume, go up, a little bit of accumulation to set up the bounce into a high volume, go down, distribution. It's that, it can be that simple if you just see it that way, right? But you need to use this with the wave chart. I'm making this like super easy so anybody can understand it. Just two things: high volume and the candle or the point and figure block or whatever after it. Is it going up or down? It can be that straightforward. All right, you don't need expensive courses or anything like that. So this is an indication of high volume down, distribution gets tested, redistribution here, breakdown, comes back up, redistribute some more, breakdown. Right? Now that doesn't mean you have to use some logic here. First thing is I have 2.2 times average down volume. Selling, heavy selling, followed by weak pullbacks. What do we have in the background? We have this. What is this? High volume. What happened after that? It's a breakdown. So this is an indication of distribution. And now we have an opportunity to sell the test into that distribution. Price goes up. We have like a barrier here. If at least the longs, they would want to get out because they're trapped. It goes back up there. What do you think they want to do is get out, break even, which adds to the selling pressure, which causes markets to additionally go down. Okay, that's what happened, and this is a beautiful example of that situation. Where is accumulation? Last accumulation was right here. And you know what? That's where it stopped. If you look, that's where it stopped. Around that area. Around this area. Right? At least there was a bounce. And then finally went into that area. So another point you should learn from this: high volume is like support and resistance because it's a place of heavy buying and selling. So it's a potential place where more buyers and more sellers are going to be there. So if you have heavy selling here, chances are when you go back up there, they may still be there serving as resistance. If you have heavy buyers here, when you go back down to that same level, chances are they're still there. And that's what's causing the bounce. Alright? Alright, that's all I got. I hope you guys are learning something from these videos. Take care. Bye.